Hello and welcome. You tuned into Market Fatafat with me, Ankita Saxena, and with me as always is Sharad Dubey. In the next 1 hour, we'll take you through all the top buzzers in trade on the back of news flow or on the back of technical charts. But first up, the markets. Sharad, yesterday the markets were in the pink of health, but clearly since our clothes have changed, so it has to be a sea of red.
Exactly. I think there is a coincidence, or our team is actually working really hard when it comes to the dressing. But yes, the market conditions, the selling is coming in, and Nifty is trying to attempt twice, but still below the 25,100 odd mark, and significant correction coming in when it comes to the IT space as well. Let's look at Nifty Bank also. That's also trending in the red as well, as we discussed, and we see almost a 200 points cut, but a recovery attempt from the day's low is being made. Now, of course, the IT space is something to focus on, especially strong numbers from Infosys, but a reversal in IT space. Nifty IT index is down 2% in the day's trade. Coforge, Persistent Systems also taking in the brunt as well. And lastly, the advanced decline ratio, have a look at it, be it the mid caps or the small caps, all the broader indices are also seeing selling pressure across the segment. Of course, earning specific movements are happening. Nestle came out with its results, mixed set of numbers coming in, and Nestle downtake of almost 5% in the trade. So we'll be looking at the commentary, especially on the volume and the recovery in the rural markets as well. And now also earnings are coming in, Indian Bank and ACC to be precise, where the numbers are coming. Indian Bank numbers are looking decent on our screens. Provisions, they are down almost 13% sequentially, and we're seeing a good uptick in the stock as well. Stock is up 3% and there was a bullish view in some PSU counters as well. Canara Bank also with its earnings, that's also up 3.5%. So we are seeing PSU banks coming up with good set of results, and that's why a recovery is coming from the Nifty Bank as well. But of course, the weightage is on the lesser side as compared to the private players. But let's move on, and let's welcome in Ashish Kayal, who is the founder and the CEO at Waves Strategy Advisors, and joining us from our research team is Rabinder, and from our Delhi studios is Kanishka as well. Ashish, first of all, how the markets looking like? A googly, we could say, markets has played today. Today is of course a Nifty weekly expiry as well. A lot of volatility. Do you see market going under consolidation for the next 2 to 3 odd days?
Yes, it looks like that. I think market can be possibly in the red because you are wearing a red tie and the other female, she is also in the red. So that's why there is some kind of a pressure. Having said that, I think it's going to be range bound movement. There was an attempt on the upside for some extent about yesterday and day before, and now we are again trying to give away all those gains. So as of now, I think market is trying to find the direction. It's going to consolidate broadly within 24,980 and on the upside 25,200. That's a broad range within which price can move. Having said that, I think there can be an attempt in the second half today, again going back towards that 25,120 mark. So over short term play for the range, for a bigger trend to emerge, we need to see a breakout of 25,200 on the upside, so that a decisive move or momentum can pick up from here. The sectors are not supporting, so at times there are IT that is under pressure. Today we can see Bank Nifty, so the results are not coming as expected as well, and that is putting pressure on the market. So it's a consolidation zone that we are into right now.
Right, so let's get started with all the buzzers in trade in that case. A lot of stock-related movement coming in, especially on the back of quarter one numbers that are trickling in. We spoke about Canara Bank, how that is moving in trade on the back of quarter one numbers. Let's move on to the next counter also that is moving on the back of numbers, and that is Nestle. Now, Nestle saw a massive cut of almost 4% right after the results came out. Now, if you look at the numbers there, it is trading with cuts of more than 4.5% right now. The revenue was in line, but EBITDA and PAT gave a miss as far as each now is concerned, and margins were largely in line as far as the Nestle margins are concerned. Now, let's look at the numbers. As far as the revenue is concerned, we saw an uptick of 5.9% on a year-on-year basis. The net profit was down 11.7% on a year-on-year basis at 559 crores. The EBITDA stood at 1100 crores, so with a downtick of 1.3% on a year-on-year basis, and the margins came in at 21.6%, which is a downtick of 156 basis points on a year-on-year basis. Now, if you look at some of the key takeaways or what the management had to say, management has noticed stabilizing prices for edible oils and cacao, a declining trend in coffee, and stabilizing to moderate increase in the prices of milk. Also, the e-commerce has maintained its growth momentum, contributing to a 12.5% of domestic sales. That's driven by quick commerce and the new launches. So that's the statement coming out from the management. But Street has clearly given it a thumbs down. Nestle trading with cuts of more than 4.5%.
Well, yes, markets have given a thumbs down when it comes to Ambuja Cements. But Ashish, looking at Ambuja Cement currently, the stock, of course, earnings impact is also coming across this segment, and cements have given mixed cues going ahead. So, what are the important technical levels you are looking at?
See, Ambuja Cement has shown a very strong outperformance if you look at the entire cement space. And then over just nearly a month's time, the stock was around 530 and now quoting at around 620 levels. So a 90 per rupees jump from 530 is decent enough move that we have already seen. So the overall undertone for Ambuja Cement, I think it's on the buy side. One should look for accumulating the stock. We can expect a target on the upside, which can be around 660 levels. And on the downside, one can maintain a stop loss for around 601.
Well, important levels coming in for Ambuja Cements, but the overall trend still remains in strength when it comes to this stock. But moving on, let's move on to Dixon Tech. The stock has been buzzing over the last 2 to 3 odd trading sessions on strong earnings, guidance and broking upgrades, and today also the stock is trading in the green as well. Exclusively the story coming for ET now, where sources have stated that Centre will get an investment proposals worth 16,000 crore rupees for ECMS segment. Now this is of course the electronic components manufacturing scheme which would be in focus, and the approvals would start trickling in from 1st August itself. And of course, Dixon Tech and EMS players are something which would benefit from this. And management has also spoken about their guidance, especially with the JVs which they are announcing. And that is what the street is factoring to be much more positive when it comes to the overall top line growth of the business as well. So largely Dixon Tech numbers have been strong, brokerages have been bullish, and now government impetus is likely to help the stock as well.
All right, so that is a Dixon Tech. But let's move on to Cipla charts. Ashish, you picked out Cipla. Now, some of the pharma names have done well and some of them have not. And Cipla is one of them that has underperformed. So on the charts, what do you see for Cipla?
If you look at Cipla, I think the overall pharma, if you look at the entire pharma cycle, I think we have slowly and steadily started seeing pharma being outperforming. A lot of stocks have started doing that. Cipla, after forming a low around the zone of around 1455, has shown a very smart move on the upside. The entire fall looks like was a wedge-shaped ending diagonal pattern as per Elliott wave, and it's going to recover back to the levels of around 1525 or 1530. So the target on upside one can maintain as 1530 for Cipla. On the downside, the stop loss can be maintained at around 1470 levels, and the risk reward looks very appealing from these levels.
The focus shifts in the primary markets as well. A lot of IPOs lined up this week, and the IPO under consideration is Sri Lotus Developers. Anand Kamal Nayan Pandit, Chairman and Managing Director, and Sanjay Jain, the CEO of the company, have joined us. Good afternoon, gentlemen. First question is for Anand. Could you just give details about your company and what kind of growth outlook lies ahead?
So our company name is Lotus Developers. We are established in a very strong micro market of Mumbai's western suburb. We are in real estate, and especially in very high-end real estate. We make luxury and ultra-luxury residential and commercial complexes. Right now, our focus is on redevelopment of the societies. As we know, Mumbai has got majority of Mumbai, I would say, is very old. Almost 40-50 years back, these buildings were constructed. So we are taking these projects and convert them into and reconstruct them into a high-end residential and commercial towers. So we are basically a asset-light model, and we are in the ultra luxury segment of redevelopment projects.
Right. Sanjay, I'll come to you then. You're raising almost 792 odd crores via this IPO. Talk to us about how do you plan to use those proceeds? How are you going to use the money raised in your business?
So the IPO is the 792 crore. Out of 550 crore is used for the three ongoing projects. That is one in Warsaw, one in the Juhu, and one in the Carter Road. And the balance in the general corporate purpose.
And Anand, any kind of key risks associated with the business or the industry when we speak about the redevelopment projects, especially in a competitive market like the Mumbai metropolitan region?
Real estate in general has got, as we know, many risk factors, but our business is completely a different model. It's more like product driven. And since we are in redevelopment of societies, uh, all other associated risks are very minimized. But if tomorrow government changes any rules and regulations, we won't encourage redevelopment, then that's the biggest, I mean, it can prove biggest hurdle. But otherwise, I don't see right now government wants maximum redevelopment.
Okay. Also, Sanjay, talk to us about what kind of launches or projects that are in the pipeline in the next 12 to 18 months.
So next 12 to 18 months, 7 projects we are launching. And the total estimated sale for the upcoming and ongoing project is 19.35 lakh square feet.
Thank you, gentlemen, for your important views coming in for Sri Lotus Developers, and best of luck for the IPO. But coming back to the markets, Ujjivan Small Finance Bank, the numbers you're having a look, it's almost 1.5% down. But this is it for the show. We are running out of time. And on that note, we are giving you a goodbye from me